You are listening to Mining Stock Education.
Your listeners need to realize this isn't investing, it's speculating. You're speculating on an outcome. Patriot Battery Metals was a company I financed it at 16 cents. I also participated at 40 cents. And we locked up the stock for a year on that financing, a $12 million financing. They made a lithium discovery. It's a truly great lithium discovery. The stock went to $16.
Thanks for tuning in to Mining Stock Education. I'm your host, Bill Powers, and you're in for a treat today. A new guest, an uber successful junior mining speculator. He's an activist investor. He's also a strategic consultant to many junior miners that he invests in. My guest today is Jeff Phillips. Jeff, welcome onto the program. We were introduced by John Kaiser a couple weeks ago, and it's been inspirational learning about your story and some of your huge wins. And thank you for coming on the show to share with my listeners. But let's start at the genesis. You're in your 20s. You're not yet a resource investor. How did you become a resource investor back then?
The short answer to that is I had a friend who was a broker for Rick Rule when he was not just starting out, but he was already successful. But and you know, it was a bull market, and everything we bought, he'd call me. I had my own business at the time, and we started buying mining stocks. And again, you couldn't really do any wrong in 93 and 4 and 5. It was a pretty incredible market right up until Bre-X happened. So, and I went, you know, again, it's kind of bad to come into a bull market because, you know, the saying is that in a strong wind, all the turkeys fly. So, you know, it was a learning curve to realize that I was in a market that was pretty rare. You know, when you're buying a stock that doubles in 3 days and from 50 cents to $1, then it's $2 and it's $4. You think you found the greatest thing on planet Earth, but that's not the resource market. It's highly speculative. It goes in cycles. And the true success is the people who can do deals when the market isn't a bull market, and do well. So, and there's ways to do that. So, but I think we're coming into a bull market. So there's going to be a lot of people that think they're really smart.
So when you got in touch with Rick, you then later went to work for Rick. So what was that transition like? How did you make that decision?
Well, I didn't really, it was indirectly. Again, I didn't actually work for Rick.
Or work with him. Yeah.
Yeah. What ended up happening is my partner that ended up being my partner and my friend that was a broker decided to start a corporate communications business at Rick's advice. And he didn't know a lot about marketing. He was an MBA finance guy, super sharp guy. Very successful to this day in everything he does. But he didn't understand, helping companies develop their back then, we were still using fax machines and corporate profiles. Like on my wall here, I have Silver Standard Resources, which is whatever it's called now. But I did their first corporate profile for Bob Quartermain back then. And I think the company had a $30 million market cap. So it's the very first corporate profile they ever had. So I came into that business that way, and we formed a partnership. My friend and I, Rick recommended a lot of those companies. For 3 years, we mostly did that till we sort of went on our own.
So when you made your money in the 90s, were you able to keep it? Because oftentimes in your first bull market, you give a lot of it back in the next bear cycle.
We got really lucky. We went out on our own and we got involved with a couple of oil and gas. Well, one company we got involved with and financed as part of the financing team was called Ultra Petroleum. The stock, went from, 50 cents to $10 back to 50 cents because people, again, I didn't understand the markets as well as I do now, but, the people weren't the best people. The asset was tremendous, but, the stock ended up coming back to 50 cents, but then they bought real management in. It was a real asset. And I think at its peak, split adjusted, it hit $200 a share. Again, I wasn't a shareholder then, but it was very successful. Because of that deal, we formed our own company called Pinnacle Energy. And took it public. And 3 years to the day after we took it public at 50 cents, we had brought management in. We were smart enough to figure that out because we were the board at the beginning. And we staked way too much ground. We actually used every penny we had. And another bad example because we thought we were smart, but the company actually got sold 3 years later. And that was after Bre-X. It might have been the only company newsletter writers and everybody made money on. I think we sold it for $18.50 a share to a Marathon Oil on the NASDAQ. So, very successful deal. And I stepped out of the resource business because it was horrible then in 99, and did real estate development. And then I came back when I started seeing some of my old clients trading at, pennies instead of $4 or $5 where they'd been. I started investing a lot of that money I'd made through the oil and gas and some of the earlier deals. in some of my clients, just buying in the open market. And obviously 03 to 07 was a good time to be doing that. I felt smart again until 08 happened. But I'm always, I followed a rule in my own personal finance, which is just my thing, that every year I want to have a larger cash position than I did the year before. So if you do that and you always make yourself, your cash is growing.
Even in a bear market, Jeff? More cash?
I think in the last 20 years, I've had 2 years where that didn't happen, and it's worked out to my benefit. I was telling you the story of Irrelevant Resources when there was no bidders in 2008, and and that's a whole nother story. But but again, I've learned a lot over the last 30 years about the resource market, and it's highly speculative. Again, this is I don't know who your listeners are, but most people shouldn't be investing in the junior resource market. The bottom line is that if you like gold, I mean, we're talking today, and I think gold's hitting another record high. And I'm a big believer that over time gold goes higher because they keep printing dollars. It's it's not really going higher. It's just there's more dollars in circulation. So it's hitting a new high. If you like gold and you want gold exposure, the 95% of the investors out there should be talking to a financial planner or a broker that understands what their goals are. And if they want exposure to gold, they're looking at the Agnico Eagles, the Newmonts, the Barricks, and again, you're betting on the commodity. If you like uranium, you're looking at a Cameco or a Denison, or I can't think of someone else off the top of my head, but, but I specialize in the junior resource sector, which isn't really investing, it's speculating.
And so why do you do that? Why do you speculate? Is it because you made so much money thus far doing it that you're just hooked on the thrill of the drill, or you have the connections that allow you to get an edge?
I think it's number one. The reason I keep doing it is because I'm pretty good at it. So, and the reason is because I've learned over 30 years what to look for. So I have two principal things I look for when I'm financing companies, and it's really not the asset first off, but the other side is it is fun. I mean, again, I laugh. I have friends that, fantasy football's starting, I guess, right now, and everybody's picking their teams. And I watch all my friends, and they're like, this is their favorite time of the year. They get so into this, and then they watch football every Sunday. And I like football. I play football, but they ask me why I don't play, why I don't want to participate. And I'm like, I play fantasy football all week long in the junior resource sector. And it's sort of the same thing. I have friends that are in it. We're all on the same team, and I can get into what I look for in companies if you want at some point.
Yeah, I do. But first I want to ask you, do you attribute your success thus far more to skill or more to luck?
Skill. And, I told someone the other day, again, when we get to my two main things that I look for in a junior resource company, that's the main thing, but you have to have some luck too, right? Again, I often tell people, I have a rule that, if you are of the right net worth and it fits your profile to be in the junior resource space, and you need to get good advice either from a broker or a quality newsletter writer or a show like yourselves, you need to be able to take in information. But again, part of it is that it's fun working with if you're working with good people, and it is the thrill of the chase. You're looking for something, and that's part of it too.
And the first thing you look for is share structure, right? Or one of the two things?
Share structure is my number one thing. And again, we can go into that, and then obviously people. But again, I can have good people, and if it's a bad share structure, I don't want to be involved. So, if it's a good share structure and good people, I follow a rule. I think everybody should, that, a lot of people in the junior space, again, if you're of that net worth and it fits your profile, I'm not recommending anything. You need to figure that out. But, a lot of people own too many of these stocks. I talk to people all the time at conferences. They ask me, hey, will you look at my portfolio? And they pull out a piece of paper with 75 companies on it, junior resource and developers and, small producers. And I'm like, I couldn't track all these if and it's kind of, my retirement job that's what I do. So you really want to have 6 to 12 companies in the space. You want to know those companies pretty well, or you want to be getting advice from someone who has a track record of being able to, again, because if you have more than 12 and you have a big success, it's very much diluted, and if you have less than 6, and, I often tell people that, 5 years ago, I had 10 companies, which I think 8 of them have done extremely well. They've advanced to $100 to $300 million market caps, real assets. But if you had me rank those 10 companies from 1 to 10, the company that actually ended up performing the best is the one I would have put at 10. So there was some luck involved there. Yeah, it wasn't a bad company. It's just I wouldn't have picked it to be my number one pick.
So it is a probability game, right? Your role as a speculator is to try to put the probabilities in your favor and then see what the results are.
Absolutely.
So 8 out of 10, is that your best 5-year run you've ever had? Because I get happy if I get 6 out of 10 or even 4 out of 10 in a bull market.
Yeah. Yeah, it's been a pretty good 5 years, and that's really kind of ironic because it hasn't been a great market as far as the overall markets. You've had to work really hard. But, again, it comes down to my number one thing when I look at a company, and it's structure. And I can go into you with that means something different to everybody. A value investor and will tell you that, it doesn't really matter how many shares are outstanding. If they believe the asset's worth this and the company's trading at this market cap, it's a good buy. Well, the structure is a big deal if they're going to be able to develop into that market cap and advance and unfortunately, the junior resource space is full of short-term players. You see all these life financings now there's no hold and they get warrants and I think the 4-month hold is a stupid thing anyway. Back when I first started out, you had to hold the stock for a year or so. One thing is that, I want to see that management has what they call skin in the game, or they have an investment. They're reporting insiders. It's really important because you'll have companies tell you that, management owns 40%. But when you look at the CDAR report, they own 9%. Well, what they're talking about is their family, friends, whoever all own shares too. Well, that's not fully reporting. I want to know how many shares are fully reporting. I want to know that I'm getting in the boat with management with a goal to sail across the ocean and get to the other side. We may not make it, but I want to make sure we're all going down in the boat together. So
how do you make sure that management doesn't have an offshore account, that they're not lying to you?
You look at you ask them to provide every financing and every list of who's financed the company. And the structure goes further. I mean, first I want to see big insider ownership. Second, do you have, who are the other shareholders? If I see that, a Route 1, like in Aldebaran, is owning 40% of the company, I know they're not playing this for the short term. They're fully reporting. A company like Bravo Mining that I financed pre-IPO at 50 cents, their CEO owns 50% of the stock, fully reporting. I can see where all the other stock is, again, who he sold it to. But at the end of the day, Luis at Bravo isn't making any money unless he develops that asset and sells that asset to someone else.
So as part of your due diligence, do you ask the officer of the company to certify the cap table, send it to you, and you actually see who's on the registry?
I don't take it that far. My specialty is companies with a $3 million to $30 million market cap. That's where I can offer, I call it activist investor. It's more like parental supervision. But I want to make sure they spend my money properly so they can advance to a $50, $100 million market cap. I want to make sure the other shareholders that are coming in, I was sort of forced into this when I came back into the market in 2003. I mostly bought tons of stock in the market. And when I started doing private placements again, I was astounded to find out that, nothing had happened with the company, but the company had doubled. But when it got to 4 months, it went back to the financing price because there was only a 4-month hold. Because when I left, it was a year. So I asked, there was a company called Pediment Gold that eventually sold and was a great deal in Mexico for me. But I asked, why would you sell shares to people that are only going to hold it for 4 months? So that's how I kind of got back in. When I started writing, a third of the check for those financings, I said, instead of inviting these other people in, let me invite some people I know in the business that that I like to see a company develop, and I'm playing the longer game. And so I know that I've got like-minded shareholders. So that's part of the structure thing. I want to know who your supporters are. Who have you sold shares to before? So one, I want to see at least 25% fully reporting insiders, management usually. And then I'd love to see that there's other, reporting shareholders that have written checks in the past and they're in it for the long game. So that's what I look for.
The warrant overhang can destroy the upside in stocks as well. What's your take on warrants?
Oh, I think managed properly, it's a way to finance the company. And again, but if you're selling stock to people that are just going to blow your stock out as soon as they have the opportunity to keep a warrant, it's a vicious treadmill and it's hard to develop a company. And again, I want to be involved in companies that go from 25 cents to $10 over a course of 3 or 4 years. And not every company is going to, be able to, the assets may not work out. But again, if you have the structure and the right shareholders, you have a lot of room to pivot. I have a company that started doing something in Ireland and it's highly successful, but they had to pivot to Peru. They were able to do that because their share structure allowed them not to have a bunch of people panicking and collecting warrants. So again, they've raised money at successive higher prices. Now they're very successful.
Hannon Metals?
Uh-huh. Yeah.
Okay. All right. Well, with Luis at Bravo.
So, I'm just to fully disclosure, Hannon is a large shareholding of mine, and it is and I consult for the company. And I've known Michael Hudson for 15 years. I did a rare earth deal with him that he put together that, went up 3,000% back in the rare earth boom in 08 and 09. I was lucky enough to be a shareholder in Southern Cross, which I think he just raised $140 million at $1 billion market cap. 4 years ago, he took it public at a $30 million market cap. Very successful individual. That's the other important part with structure. I want to see a person, again, everyone's not going to have a perfect track record, but I want to see someone that's actually built something before and sold it.
Jeff, do you even consult geos within your network when you're looking at an early stage project?
Yeah.
Okay.
That's a funny question. Yeah. No, I do.
That's a distant third? Is that a distant third on your checklist then? Or
yeah, Brent Cook. You probably know Brent Cook, right? He'd probably laugh. Brent looks at stuff, but I have a couple of independent geologists that he knows too that they're retired, but they look at stuff for me. But at the end of the day, it's people and structure. If the people have been successful at selling a company before, they're not working on something that, they don't believe in, and they've been successful before. And there's not that many people in our business who can say that, at the CEO level.
So you want management to have skin in the game, insiders to have skin in the game, like Luis at Bravo that you mentioned.
Absolutely.
But do you think he has too much skin in the game? Because it's always a little bit of caution for some investors if one guy owns too much, especially a controlling block of shares.
Not if they're fully reporting. I mean, I'm going to see if he starts selling, he doesn't, again, a good example is you probably I've heard of the Hunter Dickinson group, Bob Dickinson.
Yes.
So, a good friend of mine last January, Bob Bishop, who used to be again, in my first career was a friend and a big newsletter writer and very successful. He introduced me to Bob Dickinson in January, and it was after, I know who Bob is and we've met before, but, again, I'm sort of an activist investor and I just work on my own things, but he wanted me to sit down with him and have lunch to hear about a deal. And in my head, I'm going, I know about A-Mark. He's made a discovery. I know the Hunter Dickinson group but I'll have this meeting. Let's go to breakfast. So we sit down, and turns out it wasn't on A-Mark. It was on a little company called Quartz Mountain. And I said, I thought this was going to be on A-Mark. He said, no, I have a deal. I had a discovery hole a year ago, and I'm going to raise money. And he starts telling me about the deal, and he said, we've got these 2 properties, but here's the structure, because that's what I wanted to hear about. He's all, I own what turned out is I own 50% of the shares. And I said, fully reporting, Bob? He's all, yeah, fully reporting. And he's all, my backer from Saudi Arabia owns 20% of the shares. And I said, fully reporting? He's all, yeah. And he said, I'm going to raise $4 million. We're going to put in our percent, which was higher than they'd written checks before. And he's all, I'm looking for someone that's a good shareholder. And Bob says, you and some of your friends are great shareholders. So I'm going to raise $4 million. I'm going to put 1.5 in and want to know if I want good shareholders for the rest. I said, great, I'm in. He's all, do you want to go through the property? I said, no.
So you didn't call Brent before you...
He did go through the properties, but the truth is that, look, it's Bob Dickinson. He's had success. He's had some faith, like all of us, not everything works out, right? But he's fully locked in. He's in that boat. We're all rowing together. And his first phase 2 round of drilling was okay. It wasn't the home run we wanted. The stock held up great. He just completed a phase 3 drilling. He seems pretty excited. But again, I don't really care at this point. He's got a proven track record. He's found many mines before. And I'm willing to let him run with it because he's a fully reporting insider with, again, he's not selling stock to make money. And he's been successful. He doesn't need to do that.
So when do you exit? Do you exit before a PEA if you're in so early in the stories?
Typically my positions are quite large. So, my exit strategy is either sell the company, which is not me, it's the management doing that. So in Bob's example, he likes to say, I have a history of transacting, which, discover, transact. So, in that company's case, we'll see where it goes. But, again, I'm not a hostile investor, but when companies get to $100 to $300 million market caps and they're raising, $30-40 million and 50 and 100, yeah, I'm letting them do that. I'm letting them grow, but yeah, I'm taking some shares off the table, but it'll take me a year and a half. And I'm not aggressive about it because, again, I'm financing good people. And when they get to the $100 to $300 million mark, it's usually because the asset has the opportunity and the next level of player comes in because they think it can be a $1 billion asset. So it's either, but there's cases like, again, Patriot Battery Metals was a company. I was one of the first, I financed it at 16 cents. I also participated at 40 cents. And we locked up the stock for a year on that financing, a $12 million financing. They made a lithium discovery. It's a truly great lithium discovery. The stock went to $16. Yeah, I think I was selling stock at $2. People ask me, but again, it was massive liquidity and the lithium thing was booming but yeah, all the way up, and I still own shares to this day. So, but there's things that they're out of your control. Like that's a tremendous tier one lithium discovery with an incredible management team that's been brought in that's developed from scratch a $4 billion lithium company. But the lithium prices took a 90% hit in the last, 2 years. The actual price of lithium. So the stock, trades around $4 now. But again, I financed it at 16 cents and I'm holding stock still because it's a tier one asset. And when the lithium price comes back, and I'll probably sell some too early and some too late. So you sell at a buyout or you sell when there's liquidity, it sounds like, when it doesn't hurt the company. I'm a pretty large shareholder in these companies. So again, it's not like, and again, that's why your listeners need to realize this isn't investing, it's speculating. You're speculating on an outcome. And, when you talk about a company, it's a snapshot in time. I can say, again, my favorite company could be whatever it is right now. And 6 months from now, things could have changed. The commodity price, drilling we didn't expand the deposit, whatever. It may change. That's what happens. So again, these aren't things you sit back and you buy and you plan on coming back and look at 10 years from now. Anyway,
so you watch over management and you watch over the companies that way. You mentioned you're a friendly activist, so you've never gone full-blown Carl Icahn where you had to replace management when you didn't like what was going on?
No.
Nope.
I've had, in many deals, I probably had a couple deals where I would have liked to replace them, but it's not worth and again, that's why you have a basket of stocks, but for the most part, I've had good management teams over the years and I've had great outcomes and I've had outcomes that weren't so good, but that wasn't management's fault. That's part of the speculation. There is some luck involved.
You speculated 15 or so years ago in the rare earths and you just knocked it out of the park. Could you share those stories with my listeners, please?
Yeah, I financed a company called Rare Element Resources. They had a joint venture with Newmont, very promising. Newmont was drilling for gold on their project that was called Bear Lodge in Wyoming. And as I got involved with the company, the CFO was a friend of mine and a really good person by the name of Mark Brown, one of the good guys in the business. And he talked me into writing a check into the deal. And I started looking at it and, their main focus was the joint venture and the gold drilling, but they had a tremendous rare earth asset there too. And I didn't really know what rare earths were. So I started researching it. And I said, this is incredible, that China provides all of these things. And this is 08, 09. And basically I talked I said, you guys should do I think it was called a PE or I know we're 43101 they didn't have one on the rare earths. I said, I think this is the real story. I'm excited that Newmont's drilling for gold, but this is pretty incredible. So I ended up financing the company 4 times. You mentioned John Kaiser. He's one of the best research analysts in the business. Some great newsletter. If you get a chance, go get at least his free Substack, and his paid Substack is only $10 a month. If you can't pay $10 a month, if you can't invest $5,000 in good advice, stay out of the junior resource sector, right? So it's not for you, for sure. But yeah, John Kaiser's, did a lot of research, and we'd known each other, and we started talking about rare earths, and he's just a wealth of knowledge. And then another gentleman who was a friend of mine and kind of a mentor, and then I ended up really being his right-hand man. Was a guy by the name, I don't know if you remember Mr. Dines, Jim Dines.
Yes. Yep.
So he was a colorful individual and very successful. He also picked up on the rare earth theme, and really he championed, and him and John Kaiser championed the fact that, hey, the United States is going to be in trouble if we don't, start, learning to mine our own rare earths, and even more importantly, be able to process that stuff. And you're seeing that play out 15 years later now. The U.S. government's writing checks. It's, and it's not just rare earths. I mean, it's antimony, it's uranium coming out of Kazakhstan and Russia. It's, even copper, even though it's mined all over the world, most of it's shipped, 60% of it's shipped to be processed in China, and they're sending the finished product. So what you're seeing is, one, we've had underdevelopment of all of these assets, metals assets over the last 20 years. We're behind the curve in copper and uranium. And on top of that, you have the geopolitical scene changing. So I think we're going to have the biggest boom in the natural resource sector that I've seen, bigger than the 93 to 97, bigger than after the dot-com 03 to 07, and even better than the 09 to 11. I think we're heading into that.
So if it's that big, what are going to be your signposts for when you should start selling? Have you decided what those would be already?
I think we're early on. My only worry is I think the overall markets are probably going to have a deflation of asset values, which is what happened in the real estate crisis or the dot-com crisis. And temporarily, people need liquidity. So if that happens, I'm going to be owning some stocks that on paper are cheaper. But again, if you look at what the markets did after that correction, look at gold, for an example. In what 08, it had reached almost $1,000 or close to that. And then my memory could be off. I'm getting old, but I believe, by, at the end of the real estate crisis, it dropped to 700, which is a pretty big drop, like 30% in the liquidity. But coming out of that, it ran to $1,600. So, again, so what are the signs? I think we're in the early innings of a bull market. It doesn't mean there won't be some hiccups along the way, but I'm a long way from, and at the end of the day, what you're really looking for, especially in exploration and development, is, profoundly changing that asset, and making a discovery or it's great if the commodity is cooperating. But again, at $3,000 gold, if I drill a good gold deposit, it's going to be great. I don't need higher gold. So at the end of the day, most of these juniors don't actually have, a lot of them don't have anything, but besides an idea. Some of them have a resource and some of them have it advanced to a PEA but again, you've got that risk too going on, like the lithium thing we talked about earlier. Lithium prices dropping 90%. I don't care how great your lithium discovery is. It's going to come down with a lithium price. It's also going to go up massively when lithium goes the other way.
Jeff, if you could change one thing about the Canadian markets, would it be reinstituting that 1 year hold, or what would it be?
Yeah, it'd be reinstituting the 1 year hold. Yeah, probably. Yeah. Yeah, it'd be that. And you're never going to change a speculative market, whether it's AI or cannabis, or you're always going to have the people that, again, aren't the most ethical people in the world, especially with like gold hitting new highs. I mean, it's, you're going to have people that, anyway, so the main thing would be, again, it's if you're going to invest in a company, figure out who the team is, make sure that the team is all, playing the full game. I don't know how else to put it. I use my boat analogy, but I want to get in a boat with a bunch of guys that are, here's our goal and we're all going to stick to it and we're either going to get there or not. I don't want to see people. So yeah, the year hold's a big thing. And again, the last two financings I've done, I put a year hold on the financings to make sure that everybody else in that financing with me is at least somewhat like-minded.
And did you not get some capital once they saw it was going to be a year hold, not a 4 month hold? Did that keep some?
It's kind of funny, Bill, because, some people in the business, I'm not naming anybody, but, everybody, that has supported certain companies before, people reach out and say, I want this much. And, and there wasn't any available because, again, I did the financing. But even before you can tell them that, if you tell someone, I had a number of people that I know that, I said, yeah, you can be. And then they come back to me and, I think I'm going to skip. I see it's a year hold. Good. I don't say that. but yeah, excellent. That's the whole point of the year hold. I don't want anybody who you can't focus for a year. And you're getting a half warrant or a full warrant in these cases. And again, that's really what it should be for holding the stock, not because you wrote a check and it's free trading immediately like these life financings. Or even that, the charity flow-throughs are okay, but the flow-through financings, that's just stock that's going to get sold. They're getting a tax break. Why would you do that?
Yeah. Unless there's a charity back-end buyer, though, right?
Yeah, if you're a charity back-end buyer, then it comes down to structure again and who your team is, right? Yeah, I mean, you know who's coming in, and then that's very beneficial because the charity flow-through, just like a flow-through, is being sold above the market price, which is great because I want to see their cost of capital go down, so I'm less diluted as it goes up. So yeah, but a charity flow-through works, absolutely.
What's your take on the accelerator clauses for the warrants when you do a private placement? Because sometimes I feel like the company, if it's successful, you're stealing my time value, guys, or do you think that that's good from the corporate perspective?
I'm indifferent. I kind of laugh when companies I'm financing say, oh, we want an accelerator. Great. You go ahead and put an accelerator on it, because if I don't want to exercise my warrants and my friends don't exercise their warrants, we're going to tell you you're not doing it. And what are they going to do when you're talking about guys who've just financed 30% of the company? So, and on the other hand, if things have been successful and the timing's right, I did a deal, and you brought it up, Hammond. I took down 2 sets of warrants in that deal. I haven't sold a share. So again, and again, it's a long-term play for me on something that I think is pretty special. I could be wrong. I mean, the first round of drilling sent the stock down, but that's not the prize I'm looking for. It's what they're going to be drilling next year. So I don't really care in the short term. But there's an example. We took down all the warrants, so we didn't have to do any financings, and we've got the money to keep drilling, and we're drilling now.
What do you think about repricing warrants when management does that and reprices them lower?
Again, it's a specific situation, Bill. It depends on what's happened with the company. It depends on who those supporters are. If, again, it can be an okay thing. A lot of times it can be a junk thing. So we'd have to go through a specific situation. But if it's, a group of 5 shareholders that are large shareholders and they lower the warrants because they missed, but there's reason to think the secondary or third property or whatever you're looking at, you want to reward your, yeah, but I can understand it from a retail side too, that I don't really want to see that as a retail shareholder. But again, it's all case in point. And at the end of the day, everybody complains about something. If a stock is successful for you, you don't complain. So, again, and I feel like we're probably heading into I half like bull markets because they're, it's a blast, but I also don't like it because all the people that don't deserve to do that well, do well. So, I kind of like the last 5 years. You had to work hard and it's a lot of work when, it's not as exciting, but it's probably going to get easy right now. And a lot of companies are going to get financed that shouldn't get financed.
Jeff, as you said, you don't do many interviews, so I appreciate you coming on the show and contributing to my listeners. Do you want to be followed if listeners want to follow you, or you just want to be left alone and do your thing behind the scenes?
No, what I tell everybody is I don't, again, I let you know what I do. I'm an activist investor. Often when I finance, I invite other people that are my friends. I'm not looking for people. I know a lot of people in the business, and I make a case for why I'm investing in the company, and I want a like-minded shareholder. I don't get anything out of that. I just want someone that's on the same, has the same goals as I have. So, but if I go to all the conferences, and I'm always happy if someone sees me, I kind of stand out with my big bald head. But I'm happy if you want to pick my brain or ask me questions. But yeah, I don't have clients. I don't, investing clients. And I essentially, again, I'm an activist investor, and I try to help companies develop into the next level, and we're, they get to go on and do the next level. So I'm usually in that level of $5 to $30 million market caps, and I'm very selective. I don't do a lot of deals. So.
And you'll be at Beaver Creek, I would guess?
I'll be at Beaver Creek all next week. Okay. I'll be in New Orleans at the Brian London's Gold Conference, which is a great conference. Beaver Creek's more of a professional conference, so if your listeners are retail, the best 2 conferences in the resource sector would be Brian London's conference in New Orleans, which is a great town to have a conference in. It's also going to be, I think, very lively this year. And then the other conference is my friend Rick Rule, who has his conference in July in Boca Raton, Florida, which I just came back from 2 months ago. That's a great resource, and follow people around that, do research. Never listen to these interviews and have someone tell you about a junior stock and run out and buy it, because you need to do your due diligence. You need to actually put some time in, or get some advice from someone who has a business that does that, a newsletter writer, a broker.
And do you go to PDAC at all? That's more industry conference, or do you not go to the industry conferences as much?
I've been to PDAC 2 in the last 3 years. Before that, I hadn't been for 10 years. I'll probably go this year just because, again, I'm envisioning this to be not without hiccups, but I think in the next 3 years, we're going to just have a fabulous boom in the natural resource sector. So I will attend PDAC this year.
Well, thank you for coming on the show today, Jeff.
I hope it was helpful, Bill. And again, I caution your listeners, you're speculating the junior resource sector. Investing is looking at companies that have cash flow and that's not the junior resource sector.